then, so the interest rates, right? They cut the interest rates, obviously, if you haven't seen it by now, by 50 basis points, 0.5%. And the next thing you know, you're reading articles on the left and the right. Well, this was a politically motivated act. Like, I don't think so.
Didn't they raise interest rates to stem inflation? And inflation's come down.
Correct.
And if you look at real rates of return, so here's an interesting thing, right? Real rates of return. And this is what you should be concerned about as an investor.
Real rates.
Which means, as a saver.
Which means what your money purchases after inflation.
Because if you look at your portfolio and you're like, wow, I had $1 million 5 years ago. Now it's 1.25. Isn't this nice? Well, inflation was up 25% last.
You're at the same place.
You're at the same place. So if you look at, say, cash investments, CDs, treasuries, right? So 30-day treasuries were north of 5% a couple weeks ago before they lowered the interest rates. Now they're 4.5, 4.75. Yeah. Let's call it 5%. So if you can invest in government guaranteed 5% and inflation's 2.5%, that's a 2.5% real rate of return. Historically, that spread has been 0.5%.
Right? 0.5%.
0.5%. So, people trying to look at where we have no idea where interest rates are going to go. We can guess this as much as the next guy, or gal. But when you've got inflation at 2.5%, what's the rationale behind having interest rates 2.5% higher than that? None, which is why the Fed's it came 0.5% as opposed to 0.25%.
Which is the argument for equities in a portfolio. What is the historical after inflation growth of equities over the long term?
If you go back the last 100 years, 7 percentage points above that of the rate of inflation. That's what, if you've owned, they say the S&P 500, broad stock market, 7 percentage points.
Which means that your purchasing power will double every 10 years.
Not every 10 years.
On average.
Yes.
On average. Yeah. It's not a guarantee.
The challenge with owning equities
is that
you might have...
It's a sequence of return events.
The lost decade. Think about the 2000s. It was a lousy 10 years.
Terrible. It was terrible.
It was terrible.
It was terrible.
But there were other ones that were phenomenal.